Ladies and gentlemen, the crypto space. We're live on a Friday, October 1st at 11:48 a.m. All right, not on time, but pretty damn close today. How is everyone today? I hope everyone is well. Compared to yesterday, we see where things are. There's no crystal ball that says things stop going down, but they did. They very much did, and that is a perfect example of our convictions being tested. And I know many people did well. Many people were fearful and filled with anxiety. And obviously, the persons that are on our stream in our community, more likely than less, made better choices, at least rational choices. That's satisfying, makes me happy. I hope we all did better than worse, and that's all we can ever hope to accomplish. Better than worse. And what we're finding ourselves is a day where the crypto space is significantly outperforming legacy finance. We'll take a look at the S&P, ES, S&P futures, and it looks like crap. It looks just horrible. Just the narrative for it, how far it's run up, the macro narrative of financials, what's going on in Congress and our financial authorities. Everything about the stock market says, what the hell are people thinking deploying their money there? It's horrible. There's no logic or reason to purchase anything from these companies. First and foremost, I posted something this morning about Curve and Convex regarding how much assets are under management. There's zero debt with these companies. Zero debt. I guarantee you there's not a single company on the stock market that has zero debt. That's crazy. That's a whole different conversation. If what people often talk about when they're assessing the merits of a particular stock over another, what's their debt load? What's their how much total assets do they have minus debt? What's the worth of the company, the valuation of the company? When you talk about every single crypto protocol, there is no debt. There's no dollar debt. That's crazy. It's pure treasury. There's like six people in Curve Finance, and there's $14 billion assets under management. Legacy Finance and Main Street have no idea. But guess who does? We do. We saw this March of 2020 when Curve had less than $1 million of daily transaction fees. And even still today, it's ridiculously early. 14 billion. We'll look back when it's 120 billion, when they have 1 trillion assets under management. And we'll say the only thing that can be said when folks ask you, how did you know? You'll be able to say, it was obvious. And that'll be the story. I like, I tell my wife that. Well, I remember my wife telling me years ago when she worked at a dental office, and there was a lot of wealthy clients. She would say, how did you get to where you are? And you've probably seen like YouTube videos like, how did you make your money? And we'll have that story that we were early. We saw something that no one else did. We had convictions to wait for what we saw to unfold. And we could keep our story simple. It was obvious, remarkably obvious. A $14 billion AUM company. Let's look at the valuation of this company. Just imagine you're a company on the stock market. Imagine this is a company on the stock market. It's a $14 billion in assets under management, and the valuation is less than $1 billion. What the heck? That's crazy. Early, obvious, no brainer. Who's in the stream? We got Killis is here. Restless Native, a pleasure. Bank Rose Productions, I caught one. Stream a day. Enoch, what a green Friday. Very much a green Friday. Will, happy Friday. Jake, Noah, reading up on ICE is essentially like a 1 inch cross chain for your LP positions. Yeah, but they automatically manage the LP positions, strategically migrating liquidity to the most opportune positions possible. It's like a hedge fund on steroids in the DeFi space, focusing on revenue streams. Oh, revenue streams. Oh my. So I am interested in providing some liquidity because it's nice to accumulate stables, which is what I've been doing. I've told you guys I've been accumulating a treasury, um, and obviously ICE is just much like a V curve or a CVXCRV position where you're just taking a portion of all transaction fees for all liquidity. So both are meaningful because ICE is a volatile asset, whereas providing liquidity in stables won't be volatile, but it won't have the same amount of returns as a potentially asymmetrically appreciating asset. So it's complicated how to manage a business, the assets on the balance sheet, and a treasury dollar denominated. But notice how I talk about everything I do in the crypto space through the lens of a business, and we're now starting to talk about these protocols, these crypto protocols that you talk about, Curve Finance. Try telling Curve Finance to a non-crypto person and say, "Yeah, I'm invested in companies. I own parts of companies, which is what a stock is. You own part of the company, so you own part of these digital finance companies." And they're like, "All right, so how are they? What do they? What do they do? They manage capital. How much do they have? Most small startup fintech companies probably have, a couple $1 million, a couple $100 million. And you say, well, this company that I bought into has $14 billion. And they'll be like, what? What's the ticker? Let me look this up in the stock market. Yeah, it's not in the stock market, dude. These are companies. See them for what they are. They make revenue. They pay employees. They're productive. They create digitally tangible output, which is productivity. And if it was rational, or the measurement was rational, like GDP, this is productivity. This is a production. It's a digital production. It's not there yet, but the system, it's obvious. This is where it fits into the system. I tell folks, I tell you, I tell myself how things are, not the CPI and not the Fed. They don't tell us what is meaningful. But I'm telling you right now, the production, the creation, the software, the capital flow that you see, that we talk about, this is real. And I don't need anyone to tell me what's real. I know it's real. Huron's in the house, a pleasure. Professor J, a pleasure. More lobby, Noah, good day today. Yes, indeed. Chris Haas took my ETH over to Arbitrum. Gas was insane. Yeah, it's just hundreds of bucks on gas. I think if I look up my gas.wtf, since like March of 2020, it's about a half a mil. That's crazy. Spell, dollar, stables, Arbitrum, cheap. Pain in the neck to get capital off, other than MIM denominated. If you want to get like assets off, you got to go through the Arbitrum bridge, which is a 7-day waiting period, which is pretty crazy. Professor J, no debt. Imagine a $14 billion financial management company on the New York Stock Exchange or NASDAQ, whatever, and it has 100 million, 2, 3. I don't even know how much revenue. Let's say $300 million a year in revenue, 14 bill assets under management. It's valued at $1 billion, and it has zero debt on the balance sheet. Zero debt, and 6 employees. You look at this stuff as a company, and it's literally insane. It's absurd. It's crazy. Dylan, a pleasure. Igor, hey. Alan, hi. Igor, hello. Alan, ice versus time. Can't decide. I go for ice. Time's cool. It's meaningful. I know the owners of the company more or less. That's what I like to call it nowadays. I talk with them on a daily basis. I think it's a wonderful experimental monetary policy that's potentially genius. What Zeus over at Olympus Dow created. It's potentially genius. It's a treasury building protocol. A treasury building protocol. And that's clearly a loaded statement that could be an entire conversation. Of course, I sold off some of my volatile assets the day before they jumped 10%. Funny thing is, I could care less. My conviction is to farm revenue sharing assets for the future. Sustainable value allocation, revenue streams. The second you replace your salary or have an equivalent revenue stream that is of the same size as your salary, isn't that the goal? Isn't that everyone's goal? Shouldn't that be everyone's goal? Or what are these people doing in, the average person population? Saving in a bank account, hoping to never work again and to consume the bank account in retirement. And, it just goes to zero because if you have a bank account, let's say with a 200 grand and you're spending from it, the value of the bank account goes down, 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 down. There's nothing coming in. There's no revenue. There's no income. So the whole point, the whole play, the whole game of life is to get revenue streams. That's everything. Bank Rose. My parents have worked their entire life for there and are extremely risk averse. If you can pick one place to park stables with the lowest risk, there is no such thing as zero risk. Lowest risk is Aave, and you get some nice yield on Aave. It's not going to change lives, but it's not going to outperform debasement. But let's take a peek. Not staking. Markets. You can park Gemini dollars for 2.83%. You're not going to get that at HSBC. You can park DAI for 4.17%. USDC 4.65%, 5.65% if you include the incentivized returns. Tether's cranking out about 10% right about now. Ooh. Now, clearly, these are variable rates of return, but look, US dollars, stable coins, returns greater than 0.02% or whatever these pathetic banks are calling, because this is a damn bank. It walks like a bank, it talks like a bank, it is a bank. Aave is a bank. So, Gemini dollars is probably the easiest because it's a very trivial fiat on and off ramp. Literally, you transfer the Gemini dollars from Gemini to Aave. You take Gemini dollars out and you send them to Gemini, and that's it. You get dollars in a bank account. That's how Gemini works with GUSD. It's as simple as that. So GUSD is your ultimate risk minimized stablecoin position, and you get about 4% on your money with the incentivized returns. Outside of that, it requires a technical acclimation to understand the position. It's not necessarily to reduce the risk profile, but to acclimate to the risk profile and really appreciate that it's not really much of an increased risk profile. For instance, I have very little uncertainty and fear associated with my stablecoin position on Curve, on Arbitrum, farmed on Abracadabra. I feel pretty comfortable with it right about now. JE4KA is 1-inch blocking U.S. customers. Yes, they are. They want to comply with regulations to get the big money, a couple $100 million in funding, and they want to be part of a digital financial system. Bees Irish, my man, finally got your damn name right. I saw it on Twitter. I'm like, Bees Irish. I'm like, what the hell have I been saying all this time? What's the matter with me? My man. Best part of borrowing MIM is 0.5% interest rate. Yeah, I mean, dude, Abracadabra is on another level with regard to every characteristic, every attribute of how it was created. MIM, spell, debt interest payments used as constant buy pressure, cross-chain functionality of MIM, integration with AnySwap for the bridge, marketing, advertising, memeage, the devs, the reputation of the devs, what the same devs building Abracadabra are doing with Popsicle Finance and Wonderland. Oh my God! It's pretty incredible. Jake, piggybacking off the question above, do you think SPL staking is only on Ethereum to incentivize locking because of gas fees? No, it's on Ethereum because it's difficult to manage staking, SPL staking across different chains. there is no direct connection across chains. What you have is a capacity to indirectly interact with contracts cross chain. The cross chain interoperability in that regard is getting better, and I've seen a lot of contracts that can invoke functions on other chains, but it's just starting. At some point, it should be completely seamless, probably in the next couple years. But for now, it's just all starting. You got to remember, DeFi just started in March of 2020, albeit MakerDAO has been around since 2017, along with Bancor. There's very few from back then, but those are the two, and that's when they started. Um, and this is all new. Talking March of 2020 is when the market started to hit, and then May of 2020 was DeFi summer, and it just exploded, absolutely exploded, all the way up until September of 2020, and then we had a market downturn until January of 2021, and then 2021 off to the races until the most recent downturn. And I would argue probably today is the start of the Q4 bullish activity. I mean, when this thing breaks this previous higher high, curve is going to go. This is exciting. There's I don't. This has got to break. It's got to break the long-term trend for Q4 2020. I mean, it can last technically according to the trend formation into like February of next year, but there's no way. With the bullishness of what's likely to play out with Bitcoin, the narrative of Bitcoin, the narrative of disintermediated financial services, it's going to break this trend. When it breaks this trend, that's it. Then it runs the fibs. And when it runs the fibs go up to about 10. Now you got to zoom out here. So the fibs take it up to about 10. You imagine a Curve at $10. If Curve had the market cap of BCH, Bitcoin Cash, it would be $22. So for Curve to be in the top 20 market cap, it's a $22 asset. Food for thought for a company that has zero debt and $14 billion assets under management. Shit. ZKO, Spirit looks interesting. I have a Spirit position locked for 4 years. I'm a 4-year lock kind of guy. I got no problem sitting for 4 years. I know where the market's heading. If you don't need the capital, lock it up. I got a 4-year lock on Frax. I got a 4-year lock on Curve and VE Curve. I got a 4-year lock on Spirit. I probably should do a little something on Pickle Finance. Come on, crazier things would happen than Pickle becoming big in the next couple of years. Dylan, going from bank account to DeFi was like going from CD to iPods, iTunes. Oh, it's a whole another world. And acclimating to this, I can imagine, is quite intimidating for persons not acclimated to it. But this is our world. We've been here. It's native. It's obvious. We know how to click. We're clicking, clicking, clicking on Ledger and making moves and moving capital and entering positions, and we just know what we're doing. And this has got to be some serious intimidating shit for people that coming from like a Fidelity account, and it's a whole nother level. So I could appreciate that. Yeah, it's beyond iPods. This is like some other next level metaphor. Irish. What about Anchor? That's cool. Anchor's cool. Can't own everything you want to own. So that's why I don't own it. Bang, thank you so much. It's a pleasure. Martin, did you see Stanley's and Sandeep's interview on London Reels? Haven't watched it, but yeah. You guys know what I think about Polygon. That hits the India narrative. When I talk about the India narrative, I'm talking about 5-10 year time horizon. You got a country of 1 billion plus and a horde, an army of hungry programmers. What the heck do you think they're going to do with the Polygon platform? So, and what do you think Stanley and Aave is doing? Oh my God. They're a bank. They are a bank. Whether they have a title or a license, I don't care. Just like I talk about these crypto assets in terms of monetary policy. I don't need someone else to tell me their currencies. I don't, well, that they have properties of a currency, that they have properties, they have monetary policy. I don't need someone to tell me what something is. I define what things are. They have properties of currency. They got properties of property. They of real estate. They got properties of dividends and REITs. No one knows what they are, but they have these properties. Period. Mic drop. Lexo. What happened if governments decide to declare crypto assets illegal? Jerome Powell said yesterday he will not declare crypto assets illegal. He said that in video. It was pretty cool. Cannot deliver detailed documentation about interest earned. Is Monero a way to evade taxation? Why would you want to evade taxation? I want to pay taxes on income. Now, that is my opinion regarding taxation. I want to pay taxes on income. I want to run this as a business, and I want my business to grow. I want to reinvest in my business. I want to expand my business. I want to purchase subsidiaries and expand vertically and horizontally, and I want to grow my revenue. Run this thing like a business, boys and girls, and I'm going to pay my taxes on income. Pick a state that doesn't have state income tax, and then lobby your senator that income tax is ridiculous. And then you get into a fight with other sovereign nations on tax policy, and it's a complicated topic. Lisa, do I have to use Arbitrum Bridge? For what? To get from Ethereum to Arbitrum, you have to use the Arbitrum Bridge. If you want to transfer MIM, you could use AnySwap. AnySwap is here. AnySwap. AnySwap.exchange. Okay. Very useful, and it has Arbitrum support. Arbitrum. Oh, let's go here and select Arbitrum. And what assets? There's a bunch of assets. It's not a lot, but you got MIM. Oh, Spell. Hey! Oh no, Spell is only on Phantom. But let's see what happens with MIM. So MIM has liquidity on AnySwap for Phantom, BSC, Arbitrum, and Avalanche. Well, that's pretty cool. So you can move MIM cross-chain from Ethereum to Arbitrum using AnySwap. Glad to call a live stream, Dan. A pleasure. Dylan, crypto assets are going to eat such a substantial part of macro over the next decade. I'm so excited. DeFi is like not even half a trill yet, pretty much. What is it? DeFi Llama? Let's see what the Llama says. The Yama. Oh, a half a trill. It's less than 200 bill. Yeah. Meanwhile, you got $14 billion no debt companies running around. And can you imagine if it was on the stock market? The company would be valued at billions, billions of dollars. Oh, that's code. Let's close this. Let's go back here. A company that has $14 billion in assets under management with zero debt is valued at $1 billion. And oh my God, the way the stock market operates, this should be a 10, 20, 30, 40, $50 billion company. Do you have any? The valuation should be higher than their assets under management. Do you have any thoughts on why SushiSwap has always come in second compared to ecosystem native DEXs? The history of SushiSwap is complicated, and I don't care to conjecture. I think FTX has done a great job at navigating the regulatory climate. I think SushiSwap is now an extension of FTX since it was acquired last year. The history, you could forget. The future, I think, is meaningful. And if I had excess capital, I'd probably like to have an X sushi position. Dylan, we click and click and click, and we're making moves. Dude, that was so good. And yeah, DEF was more than iPods, just the framework was all I meant by, yeah, it's 100,000 times bigger. The complexity, the sophistication, there's some next level stuff we're working on, boys and girls. I'm in the same boat, Dan, but waiting to show you to launch and play out, right? Yeah, I can't own everything I want to own, and I say that as much as I can. I would like a position in sushi, but it is what it is. I have my place and my conviction. When Curve Ave launching an AVAX, they did mention last week that they're launching this week, so it is what it is. I'm sure it's coming sooner than later, and I expect billions of dollars of capital to flow into the Avalanche ecosystem. And what is the play that I'm most interested in on the Avalanche ecosystem? Curve. What is the play that I'm most interested in Arbitrum? Curve. What is the play that I'm most interested in Phantom? Curve. Ethereum mainnet? Curve. Doesn't that make it simple when a protocol is cross chain? What other protocols are cross chain? Abracadabra. Oh, abracadabra. Dan. Dylan, I hear you saying, but could be priced in. It's complicated. Sushi is a complicated history. I wouldn't have an overweight position if I did a sushi position. It'd probably be like 1, 2, 3, 4, 5%. At least that's my current sentiment. Heirloom, always a pleasure. Pleasure. I haven't seen you in a while. Hope everything is okay. Digilight, do you do any or have you done any mining, or was it worth the time and effort? UTXO, or old school blockchain mining? It's not viable. I mined back in the day when I was in Orlando in an apartment. I was spending $350 a month on air conditioning. I had a 3 kilowatt power draw in an apartment. The electric company and must have thought I don't know what they thought. It was a 24/7 3 kilowatt power draw. I had 13 1080 Ti's running in an apartment. Um, it's a business. I don't think it's lucrative. I wouldn't do it anymore. Um, I believe capital management is much easier with DeFi. It changed everything. Everything changed. I mean, the bottom line is productive assets are meaningful in the DeFi space. There's no productive assets in the legacy financial space. And yeah, I don't think mining is for me. If I had investors and people gave me free money and I could take in 5, 10 mil, sure, I'll go buy a property down the road in Florida. I'll buy $1 million worth of solar panels. I'll buy $1 million worth of mining rigs. I'll take a $500,000 and set up corporate structures and human resources and engineering to manage the equipment and the DevOps to manage the software. Sure, that sounds okay. And then you got a business, and every year you got to reinvest to buy more mining equipment to keep up with the hash rate, and so on and so forth. It's a business. But you're going to make nothing if you take like 5 grand worth of mining equipment or 10 grand worth of mining equipment. Scale it up. You go whattomine.com. Everyone who talks about mining knows that. So, you run a business. You want to make like 5 grand a week, 10 grand a week. Do the calculations. You probably need a couple $1 million worth of equipment. And to keep that going, you're going to have to reinvest in the business because the hash rate's going to keep going up. So you're going to need more mining equipment to keep that 5 to 10 grand a week worth of income. It's just a business. You got to do a business plan, and you could figure out how to get funding and all that stuff. My man, Joe, can you incorporate in Texas to avoid state income tax? I don't know. I'm not equipped to answer that. I know Florida has no state income tax. Chris, I love me some DeFi. Oh, yeah. Professor J, can you touch on how the bonds on Olympus DAO work? I'm not the most astute on it because I'm not interested in a position, and that's okay. But conceptually, I'm quite intrigued because the concept of a bond is meaningful in legacy finance, and what they're doing is offering these bonds to get a discounted rate on the asset that someone's interested in buying. And the bond, the asset used to purchase the bond, ends up in the treasury of the protocol. So this treasury is just growing, it's accumulating value, which is setting a floor for the price of ohm and time. And conceptually, that's profound. It's giving protocols a capacity to build the treasury. And the treasury isn't for necessarily purchasing power, albeit it could be used for incentives to incentivize liquidity and capital flow, which is meaningful, but a treasury is a treasury. It gives optionality to the protocol. So Olympus Pro is a big deal technologically, just conceptually, breathtaking. Um, Ahmed, hey Cap, missed the stream the last 3 days. Glad to make it today. Always appreciate insights. Keep it coming. Always a pleasure. Hope it helps, guys. Chris, people give this guy some likes. 55 people in the stream and four. It's better now. 61 people in the stream, 27 likes. We can do better. Alan, it looks like Popsicle LP pools are closed on Phantom. Popsicle's not open. It's getting there. I talk with the devs. They're getting close. When it comes, it comes. Twitter said ICE is available on Avalanche. That is legit. It doesn't have much liquidity, but it's there. And it's a preface for what's going to happen. When Popsicle launches, it's going to go across a bunch of chains. It's going to use MIM. It's going to be some magical shit, in my opinion. So I have a nice Popsicle position. I know folks with more, but I have Popsicle is the fourth largest position I have. It is 6.14% of the portfolio. And I sure as when shit goes down with Popsicle, the way I think about my positions, I want to be there. I want front row seats. John, good day, Noah. Can you explain the variance in APR on convex in the CVX CRV vault? Well, it's not a variance in APR. It consists of three components. You have 22% CRV, 25% CVX. CRV is a volatile asset. CVX is a volatile asset. 3Curve is stable coins. So you're getting 16% on your money. Dollars. Pure cash. Imagine a bank account with 16% returns. To top it all off, again, 22% and 25% respectively denominated in volatile assets, often asymmetrically appreciating volatile assets. That's not a game changer. I don't know what is. So there's the variance. 2/3 of your yield is volatile assets that fluctuates in price wildly. J4KA, what are your thoughts about Saber? That's what the Saber did is not nice. It's probably not something that's necessarily enforceable. Maybe that's not something we should do in the DeFi space. But what they did was they looked at Curve source code, and you should make your own shit. Own your shit, so you know how to make it better. And if you're going to borrow some code, show some respect. That's the name of the game. Not necessarily punishable, but it's not cool. Food Bear, Texas has corporate taxes. You don't get income tax benefit by incorporating in Texas. Ooh, Digilight, my man. K Mead, a little late today, figured out how to farm MIM. I know you showed what to do with earn spell to change to S spell. Can't get it to work. One more time would be awesome. Thanks for the great info. Yep. Spell to S spell. You go over to abracadabra.money. Let it load, let it load, let it load. Oop. Sometimes you gotta let it reload. I got these tab killers. You go to the stake page, you put spell in on the top, and you get S spell out of the bottom. That's how you get that S spell, my man. Professor J, thanks. Good to know. 3x3. Ooh, my man. Alex Spell is doing its thing nicely today. Have you guys seen the charts? Of course, it's doing this thing nicely. This thing's forming basically an ascending triangle, probably, if not a cup and handle at this point. Or maybe it just keeps going straight up vertically until it's 3 cents a piece. Curve looks ridiculous as well. Let's zoom in on the 4-hour real quick. So curve is above the 200 EMA, the 50 SMA, the 200 SMA, below the 100 SMA on the 4-hour. I mean, this is heck of a candle to open up this morning. Ridiculous candles. Oh my goodness. Price action is extraordinary. I don't want that open. Close that. Close. Okay. Now let's go to the daily for what's most important. This is what's most important, boys and girls. Look at that yellow line crossing the purple. This is the 50 SMA crossing the 200 SMA on the daily. That's called a golden cross. And now let me show you something. And we'll get off this chart. Where's the last golden cross? Where's the last time the 50 SMA crossed the 200 SMA? It was early. It was in February of 2015. Data was early, 2015, February of 2021. Um, so we didn't have the 200 EMA or the 200 SMA back then. But let's just say it's where this teal line is, um, and then it ran up from there. So the golden cross got hit and price range, and it ran up 239%. And this one, if it ran up 239%, it would take you to about $3.24. No, take you to $5. So the last time you had a golden cross, it ripped 200 and change percent. If it rips the same thing from here, it'd be 132% to the upside, putting us at $5.72. But to top it all off, you have this entire lifespan triangular compression, which changes the technical analysis completely. The fib extension takes you up to $10 if you go all the way out. So this is simple rudimentary technical analysis taking us to $5.73 based on the golden cross. We're going to wrap this up in a couple minutes, but I want to try and get everyone's questions. Gary, good morning. How do you think legacy finance will adapt to engage rather than compete with DeFi? I don't know. They first got to get their heads out of their ass. Ooh, shots fired. FUBAR, most credit card companies are incorporated in Delaware, New Hampshire because they have a tax advantageous law there. Tax law. Made my first stake on Convex. Excited to start a new chapter. Yes, indeedy. Alan, you the man. Your logic and rationality makes so much sense. Thank you. I hope it helps, guys. Alex, do we have any dates for Popsicle? Soon. Inevitable. I have so much patience nowadays, guys. So much patience. Uh, Permian. Ability to collateralize interest-bearing tokens. Game changer. Yeah. So Aave. And then Cream. So Cream has some of that with Sushi SLPs. But Abracadabra being able to collateralize interest-bearing assets, farm positions. So Aave has a little bit of that with Uniswap, but nothing of the nature of what Abracadabra is doing with regard to your coin. It's a whole nother level. What they created is downright unique and disruptive. Kiran, Noah, what do you make of Barnbridge? Very interesting. The tranches and the risk transfer uh, from the juniors to the senior. Very interesting. Very interesting. Well, from the seniors to the juniors. So the juniors get paid higher interest because the risk is being transferred from the seniors to the juniors. So you get more premium for the increased risk exposure, and for the seniors, you get less premium for a decreased risk exposure. Very cool. Very cool. Um, Feels like an asset, just waiting for institutions. Yeah, it's not an asset that I suited for my portfolio, but from a technological standpoint, it's quite compelling. Guy, my man. Patrick, have a great weekend. Yes, indeed. Can I move my crypto business from a terrible state, New Jersey, to somewhere else more forgiving? Yeah, get the hell out of New Jersey. Get the hell out of New York, Florida. So there's other states in the country that have no state income tax. First and foremost, what the fuck are you paying state income tax for? Is that the most ridiculous thing? Get the hell out of that state. You're wasting money. Just wasting it. Wasting it. I know we got family and stuff, but I mean, sure, what are you going to pay a 15% premium on your entire life to be in a particular state? That's crazy. Opportunity cost. Literally, apply that to the state of choice to live in. You are paying an opportunity cost to stay in a state versus moving to another state to make more money. You literally get a 15% raise just moving to another state. Any use for ICE right now? Yeah, 50% returns on your money. Pretty sure it's yielding. They're probably doing stuff behind the scenes. No, 31%. Again, 31%. They got $122,000 worth of protocol fees to dish out. That's pretty cool. All right, food for thought. 60 people in the stream, 40 likes. We can do better. Friday, October 1st at 12:28 p.m. Thank you, everyone, for joining. As always, tell everyone to subscribe. After party on Discord. AskVid is on fire. Do yourself a favor. Stop by AskVid. Ask me some questions. The odds are I'll probably make it a private video. I'd like to get this user base moving, but sometimes I'm going to make them public. But ask questions. Ask me anything that's on your mind, and I'm going to respond to it. I'm really loving this platform. Basically, it's a live stream 24 hours, 7 days a week, and it's way too much fun. After party on Discord. I will see you guys on Monday. Y'all have a good weekend.